Conversation forward. Anil Razdan joins us along with Abhishek, Jain, Chief Market Analyst with BP Equities. Mr. Razdan, good morning. Pleasure to have you back. Mr. Razdan, to put it very simply, power is a difficult sector, at least for our viewers to understand. Can you break it for us? Because the sense what we are getting from the stakeholders and from some entrepreneurs in the power sector is that Hindustan mein bijli ki kami hone wali hai, which is that India soon will have a power shortage. Is that true?
I think, you see, over the past years, barring 1 or 2 years in the past, the capacity addition has been very robust, and particularly in the thermal sector. Our weak link is that we've not been adding capacity in the hydro sector, which is necessary for peaking power, and maybe we'll have to depend on speedier implementation of projects in Sikkim and probably in the future years Nepal to take off. The renewable energy is also picking up fast, and this will require balancing power. My worry is that we are not working adequately on balancing power through hydro, or enough work being done on storage batteries, because ultimately if you want this renewables to succeed, you will need good balancing power, and Europe has shown that capability, whereas we have lagged behind. But when you talk, you see, of power shortage in the coming years, I think that is will depend very heavily on how much industry takes off, what is the power consumption at that side, because we are working heavily, at least on the domestic sector, on white line goods, on energy efficiency program, which has been working very well. But I think the biggest drag on the sector seems to me to be the high AT&C losses and the continuing AT&C losses in the particularly in states which are heavy consuming states like Uttar Pradesh and some of these other states. Now there we have not been able to get the AT&C loss in order, and in fact there are some divisions which are reported to be as high as 70% in some of these states, or even between 60 to 70 or 50 to 60 even is a bad range. That is a big cause of worry. I think the distribution sector is extremely important, because at the moment I think the dues to the generating companies are at a staggering figure. And if I'm to believe some estimates put across by the private power producers, I think almost 42,000 crores may be the total payables by the end of the year. Of course, the public sector is doing a little better, because it has this capability of adjusting against the state revenues. So I think the government after the elections will have to take a very strong call on the distribution sector. I'm not so worried about the generation sector, though of course the private sector needs to be given an even-handed treatment as compared to the public sector. It is unable to collect its dues. I think it's been a demand from them that bill discounting should be allowed. And there was also a proposed regulation that may come into force. That is, generator could cut off supply to the distribution end. But I don't think that makes good news for power generators, because they want somehow the power to be consumed and not stored. But at the same time, of course, dues keep mounting. So I think we've got to find a fix to all this in the coming time. But the sudden spurt, I think, in some of the public sector stocks that you mentioned, at times I wonder, I'm not a market analyst, but you see the government's demand of asking for a second dividend in the year from its public sector undertakings could well have thrown that spurt.
Yeah, perhaps. And Abhishek, I want to get you in on the discussion as well, because what, according to you, is driving the investor sentiment across power and ancillaries, be it REC, PFC, or for that matter, NTPC? They've all been on a tear of late.
So one of the most important thing which we have discussed is basically the availability. Two important things. One is the availability of coal, which has been there right now for last 2-3 months. We have seen an improvement. And for second important thing, for a player like NTPC and Power Grid, they have the confusion about the ROE thing, which they have already discussed, which has cleared the mind of investors. Third important thing, there a lot of new capacity addition is happening. Like for an NTPC, close to $3.3 billion of projects are going to get into ROE segment. They'll start generating commercializing in FY20 in this year, and then the revenue will start picking in from this thing. So these three triggers, and plus the improvement stock market sentiment because of the likelihood of Mr. Modi is back. So there are a lot of positive among the lot of institutional investors, especially on the foreign investor side. They are talking about these reforms will continue, and that will lead to, and these most of the stocks were available at a very attractive valuation. Yes, I'm just giving an example of NTPC. Just till last week it was available at 1x book value. Still at this point of time also it's 1.2 times, 1.1, and an attractive dividend yield. These are the things why we have seen a lot of there's a recent rally in some of the stocks.
Okay.
Like NTPC, especially NTPC, PFC and RECs.
If we currently look at the power sector, 2-3 years ago it appeared that the solar and the alternate sources of energy will make a comeback. Thermal will take a back seat. But looking at the way how solar prices have moved, how capacity addition has moved on those front, it's not been a very heartening capacity addition.
I think, is that a question to me?
That's right, sir. That's right, Mr. Razdan.
You see, I'm not particularly worried about capacity addition at the moment, because if you look at the PLFs, the figures suggest that our PLF is hovering around 60%, and that is not a good figure. That almost a decade back, you see, was above 70%. Now, PLF has to be optimized. We cannot be running plants at low PLF, and we've got to get the maximum out of the plant. But one area, you see, where I think the regulations recently have also done good, which is also worth mentioning, is that we're asking the thermal plants to do the Cleanup Act. And that will require, again, investment in SOx, NOx elimination and particulate matter elimination wherever it is not there, and gradually we'll have to move to water conservation also. Now, all this can be added on to the tariff. But at the same time, if you see some analyses in recent months, some of the, particularly if you look at the portal, which is of the Uday portal, they are saying that there has been a sharp increase in power procurement costs. And that essentially is on account of the coal prices having gone up. International coal prices have also gone up. Domestic coal prices have also gone up. And freight charges have also gone up. So all this is adding to the basic cost of thermal power. And that will continue to be, I think, our mainstay for a while. About the solar manufacturing, I am one of those who've constantly believed that yes, India needs solar power, but India doesn't only need generation capacity, India needs jobs. And unless we are able to put our solar manufacturing in place, like the wind manufacturing, I think we could slacken the pace of capacity addition for a while till we are able to catch up. Because in any case, we are reasonably surplus in power. The problem lies at the distribution end. The transmission sector is doing well. The distribution sector must find a fix. Those distribution companies who continue to perform badly must be asked to move out, give space to efficient performers. There are enough efficient performers in the distribution sector in the country. And I think the regulators have to take a call and not look at the political masters of the day for a nod, particularly in the states.
Mr. Razdan, thank you so much for joining us on the show today. Abhishek, you as well, and for sharing your views with us on some of the latest developments there in the power space. Let's move on.